Welcome back. It's time for Overlooked Stocks. George Tsilis, senior markets correspondent, joins us now to talk about Boot Barn, which closed up 13% today. George, I was taking a look. So far this month, it's only the 12th of May, shares are up almost 30%. So I was going to ask if some of these boots are coming from China based on today's action, but even before that, what's behind the strength?
Well, obviously, there's plenty of strength going on in some of the retail space and apparel companies, Nike and, of course, companies like Lululemon. They're all starting to catch a bid with the market. So there's obviously a risk-on environment from an investing standpoint. And Boot Barn also seems to be participating in that. And this may be an opportunity across the board as a whole in the industry space for retail apparel and even in the discretionary space to look for some value. And I think that's essentially what's happening here with momentum rising in Boot Barn, but also, looking at companies like Nike, which is also catching a slight bid to the upside as of late. And so I think the China negotiations, the United States, the challenges that, all these companies have because they manufacture most of their products overseas, labor-intensive products like, footwear, accessories, and apparel. They're catching a bid, but there's also catalysts we have to consider with companies like Boot Barn, which is again primarily a Western and workwear business and accessories and of course footwear. They have earnings, and so this company is also going to be reporting earnings coming up in the next couple of days. So that's something to consider. The estimates have actually fallen slightly in the past couple months, and that's the adjustments made by analysts. But nonetheless, if you actually look at the earnings estimates for Boot Barn, they're expected to grow their EPS year over year by 30% to $1.25 from 96 cents last year. But at the same time, they're still expecting a pretty robust quarter, 18% growth at $458 million versus last year's $388. And like I said, when you see the earnings estimates having fallen, stock catching momentum, and now we're getting some perhaps flip back in terms of appetite to move into the discretionary space. Then you add in a catalyst for earnings, there could be some potential continuation here on this name.
George, there are 15 analysts that cover Boot Barn. All but one have a buy rating. The other, that lone holdout, is in the hold camp. Median price target of 160. I'm curious, that's quite a bit different than a name like Nike, where 50% of analysts are in the hold camp or about there. Are cowboy boots and Western wear considered kind of recession-proof? Why so much bullishness around this name?
Well, I think obviously the trends are popular. Nike's got some idiosyncratic issues. I've talked about it quite often, particularly in the last couple of years. They got inventory problems, operational and warehousing and wholesale problems. So that's specific to companies like Nike. But, these smaller retail apparel companies like Boot Barn, as long as they're continuing to grow their earnings and sales, particularly as long as they're growing their earnings faster than sales, they tend to have positive trends. Valuation, of course, is certainly something to consider. The aspects of workwear may be a bit more recession-proof, if you will, but they serve a niche market. And I think that's very important when you're looking at the context of, retail and, of course, the trends in apparel. They have about 400 stores. They have been growing their e-commerce, and that's another thing to consider here. Which last quarter, if you look at it, it grew 9.7%. Same-store sales grew 4.5%. They are expecting to increase their store footprint by 15% to 460 stores this year. And at the same time, like I said, irrespective of the fact that the earnings estimates had slightly declined in the last couple of months, the price relative to the estimated fair value price at the end of the year, which you said is 160, there's still quite a bit of a discrepancy there. So it doesn't necessarily mean it's going to close that gap. In fact, if you look at the chart as well, the alignment of things like moving averages are moving positive. The stock did go above the 200-day moving average, but didn't close above that. So that's something else to keep in mind as we move into earnings coming up in the next couple of days.
Okay, so just break that down a little bit more for us in terms of the chart. What should we take from that? If it went above the 200-day moving average, but you said didn't close above it.
So you'll see stocks peak below and above the 200-day moving average, and sometimes, again, they can be head fakes. So generally speaking, this has been my experience, and it could be the case, empirically, that you want to see at least a couple of consecutive closes above a 200-day moving average to potentially consider this a trend reversal. So that's what I mean by saying, well, it peaked above it, didn't close above it, so it's important to keep that in mind. It could certainly backfill, just to be mindful of the levels going back to Friday's close, which is right around the 121 area. The short interest in Boot Barn also is around 11%. But at the same time, if you do look at the EPS estimates for the year at 588 per share, it's trading around 20 times forward earnings. Typically, that's where it's at on a 5-year average. And it's also expected to continue to grow its earnings by 8.5% on 9% sales growth on a forward basis. So they're expecting quite a good quarter. And if they do reaffirm guidance, we could potentially see this close above the 200-day moving average, and that might be the definition of a trend reversal in this name.
All right. I see 3 price targets that are $200 or higher. 209 is the highest over at JP Morgan. So we'll keep our eyes on this one when it reports on Wednesday. George Tsilis, thanks so much.